But that said, this morning, while the SGX Nifty is indicating a negative start for us, HDFC Bank is going to be of a crucial importance in a big positive for HDFC Bank. Over the weekend, the central bank has finally lifted its curbs on its digital initiatives. Harsh joins in to explain what this really means for HDFC Bank. Harsh?
Right. So what's happened is there were certain curbs placed on HDFC Bank largely due to its data center outages faced by the bank, and the two curbs were of course on new digital launches as well as credit cards. Now the credit cards business has been rebooted in August, and they've seen a record number of credit cards issued since. But now what the RBI has done is they've rebooted the digital business for HDFC Bank as well. HDFC Bank of course has acknowledged that the architecture resiliency has to go up, and now that these curbs have been lifted, business generating activities can restart and reboot. It's also a green signal to implement HDFC Bank's new digital 2.0 strategy, which is going to be big for the bank because they're going to be transforming entirely from their old architecture to a new architecture. Rather, it's going to be a merger of the old with the new, and they've built short, medium and long-term plans for the same. This new architecture framework should help transform the bank entirely from its app, which is Pays app, all the way through to its net banking as well as its transactions. So broadly, it looks like quite a strong positive, and over the next 2 to 3 quarters, we will see quite a bit of transformation on the digital side for customers of HDFC Bank.
Okay, we'll leave it at that, Harsh. In fact, let's take that conversation forward. Joining us right now, Siji Philip from Axis Securities. Siji, hi, good morning. Wanted you to help us understand how big a positive is this really? Because, you know, this was sort of a big overhang for RBI, for HDFC Bank, I beg your pardon, and now that RBI has lifted this particular curb, that would mean a lot of overhang gets lifted.
Good morning. Thanks for having me. So, yeah, it is definitely a positive for HDFC Bank, given that there was this overhang of the credit card embargo plus the placement of new digital opportunities, which was tough for the bank. So, lifting these two, which has happened gradually, so first the credit card was given a go-ahead in August, and now this digital opportunities which have been given for the bank will definitely be a positive. And in the overall scenario of things, where we see that the performance of the bank as such has been steady, there has not been any volatile performances which the bank has reported. HDFC Bank, being HDFC Bank, has been a steady player, and its loan growth has been better than the industry average. Of more than 15% in the last couple of quarters. Asset quality has also been largely stable. So we expect this kind of overhang, which was shadowing the bank's performance in the stock exchanges, would definitely be a key positive. So one thing which we will have to look out is the bank will have to report definitely better than steady performances in the coming quarters. Like that we have seen in case of the peers like ICICI Bank, which has been reporting very good numbers. So HDFC Bank will have to come up with more than a steady performance in the coming quarters, and with the lifting of this ban, it will definitely help HDFC Bank to report better numbers in the coming quarters.
Okay, so that's a slight road ahead when it comes to HDFC Bank, and of course don't forget, over the weekend Paytm not allowed to onboard customers, so as you can see, the entire banking and fintech space is certainly mopping up now. But Siji, just to stay with HDFC, you're saying the coming quarters will be good, turnaround story, but the fact is, if you look at ICICI Bank over that analyst weekend that it hosted, I remember a couple of months ago, made its digital play very, very clearly. Kotak has of course been making big moves as well, and you've got SBI, the big with YONO. Your pecking order?
So in our top picks, we have ICICI Bank and SBI. HDFC Bank, because the valuations are relatively very attractive, it is quoting now below almost 10-year average. And given that the performance has been largely steady and with this overhang getting lifted, the performance is likely to improve. But we have seen that the retail growth is slowly coming back. We have seen more traction in the commercial banking business. So HDFC Bank is a good, attractive stock right now, given the valuations have also come down to attractive levels. And yeah, these three, ICICI, SBI, Kotak is definitely would be a key watch to stock out for, considering that they have actually pushed up on the growth button, and we have seen that the last quarter has been pretty good for the bank in terms of growth, though the operating performance was slightly lagging. But yeah, ICICI Bank, SBI, HDFC Bank, these four.
Okay, we're going to leave it at that. Siji, thanks so much for joining us live today on the market. Watch out for HDFC Bank at opening as well. A big positive news that has come in for the stock. We'll also be getting an interview with the top management. Joining us now, next, our live guest is Kunj.